And gold dropped 2.3% on the week, continuing its post-Trump pullback, going below 2,600. Silver was down 1.4% on the week. Silver has been holding up better than gold during this sell-off, and it has been holding the $30. It did briefly trade below it, but it closed the week at about $30.18. Remember, I said that I thought $30 silver was like $2,000 gold, and I think that's kind of the support, and it certainly is looking like it because it's holding up with the gold sell-off. Of course, fool's gold, aka Bitcoin, went in the opposite direction. Bitcoin, I'm looking at the Bitcoin ETFs. They were up about 11% on the week. Bitcoin itself is trading above 90,000. In fact, I think it's above 91,000, almost 92,000. So this is record territory. Not yet record territory in gold terms, I don't think. I gotta do the math.
Silver and its never-ending demand prospects global demand to reach new heights. Industrial demand is at the center of the change in the supply and demand landscape. They believe that by the end of 2024, industrial consumption will have reached 700 million ounces this year. This would represent a 7% increase. The electrification of everything from solar panels to electric vehicles being major drivers of this demand. It is because of this that silver stands out as the metal whose uses seem to constantly grow. Silver jewelry in all markets is expected to grow, no doubt supported as well by the meteoric rise of the gold price. Golden products will still take a good share, but to fit the price targets, the public will see more silver jewelry plated with gold, providing the same luxurious look at a significant discount. Silver retail investment is not expected to grow and has had a significant drop in demand, especially in the USA, where it is believed to be about a 40% decline. The reason for investment in precious metals has not dissipated since the U.S. debt crisis remains. The election of Trump to the presidency in the USA has given some comfort to the public that the U.S. will regain control of its spending and debts. And this is why we have been seeing the recent price declines in silver and gold. On the other hand, the silver exchange traded products have had significant inflows of close to 8% year-over-year. As the market knows, these investments are typically very sticky and do not represent a threat to the market supply structure at current price levels. Mining and recycled supply of the metal is not meeting current overall demand. Metals Focus expects this deficit to remain for the next few years. Well, from my point of view, the fundamentals support healthy demand that will not be going away anytime soon. This I call the most basic market support factor. Then you must consider inflation, the global debt crisis, the currency wars, BRICS, and the unknown. Gold is the leading indicator for these factors. And though it has suffered a significant price correction since the elections from the short-term high of its prospects, this exuberance and expected relief from mismanagement of the USA's economy will be short-lived, as the problems built up over recent decades will not disappear. In my estimation, these price dips represent a real opportunity to build a safety net that will work to offset future weakness in the U.S. currency and economy. Now we'll show you more clips, but first smash the subscribe button and turn on notifications so you do not miss out our recaps. Enjoy the episode.
MicroStrategy up 13.5% on the week, continues to borrow money to buy Bitcoin. But look, Senator Loomis came out and she's introducing, her bill for the U.S. government to buy Bitcoin, 1 million Bitcoin, and pay for it by selling gold. I mean, what an asinine trade to make on behalf of the American public. I mean, if this actually ever happened, if this bill was actually passed and signed into law, and the U.S. Treasury was actually dumb enough to sell off America's gold to buy 1 million Bitcoin, first of all, it would cost a lot more than they think, because that buying would drive the price of Bitcoin way up, which is exactly what the Bitcoin community wants in return for their support. After all, we helped elect you. We donated to your campaign. We voted for you. Now it's time to pay us, right? That was the quid pro quo. We help put you into office, and you make us rich by sticking the American taxpayer with a pile of worthless Bitcoin. I mean, that would be the worst thing. Fortunately, I don't think that bill is ever going to make it to the president's desk, so he won't have to veto it. But I think if it did get to his desk, which is not going to happen, he would veto it. I don't think he's that bad. I don't think that he would really sell out his country to that degree. Sure, he'll take the Bitcoiner money to get elected, and he'll say what he needs to say to get their votes. That's par for the course in American politics. But when it comes down to it, he wouldn't do that to his country. He wouldn't do that to Americans. Imagine Americans who never bought any Bitcoin being the bag holders because the government buys it with their money, enriching a few people that bought these Bitcoins and were able to unload them on the U.S. taxpayer, who had no choice in the matter, right? He wasn't buying. It was some politicians that were spending other people's money to reward their campaign donors and voters. And I'm sure what would happen as the U.S. government was dumping Bitcoin, buying Bitcoin and selling gold, the Bitcoiners, especially the whales, would be selling the government their Bitcoin and then buying the gold that the government was selling from the government. They would be doing the opposite trade. They would be ringing the cash register with a big smile on their face, knowing that they were sticking the taxpayer with this hot potato, whatever. Because when the government was finished buying, that would be it. I mean, it would crash. The stuff is so nonsensical. I put out a post on X. It's all sarcasm, right? I'm making fun of all this because there was another little company that came out. It's a penny stock. It was like 40, 50 cents a share, total market cap of about 12 million or so. And it announced that it's going to be buying $120 million worth of Bitcoin. Well, how is this tiny little company going to buy $120 million worth of Bitcoin? The whole company's only worth, 12 million. Well, it's going to sell stock and raise money and go buy Bitcoin. And what do you know? The stock more than doubled on the news, right? It was jumped up and up again after hours. Like, it's all insanity, right? It's now officially like the Bitcoin bubble. But anyway, so I decided to write this sarcastic post on X where I proposed a plan to save Social Security. Because I said, Social Security is insolvent. It's got, according to the government actuaries, it's got about a $23 trillion unfunded liability over the next 75 years. That's not even close to accurate. It's actually much higher than that. But if you believe the government's, fuzzy math, 23 trillion. I said, here's my plan. The U.S. Treasury has about, 2.7 trillion, or Social Security Trust Fund owns about 2.7 trillion of treasuries. I said, hey, just sell it and buy Bitcoin. And I said, assuming that they drive the price of Bitcoin up to 20 million of Bitcoin in the process, and they end up accumulating 25%, right, of the world's Bitcoin, right, 25% of the 21 million, the Social Security Trust Fund would have a $100 trillion reserve. Solves the problem. Right now, it's actuarially sound because we have 100 trillion worth of Bitcoin. Of course, the problem is you can't send those Bitcoin out to the people who are waiting for Social Security because the grocery stores don't want Bitcoin. So it's like, what are they going to do? And so I actually proposed a plan where the Social Security Trust Fund would actually keep buying Bitcoin with all the new tax revenue to support the price, but that then they would go and take their Bitcoin to the Federal Reserve that would then credit the U.S. government with dollars that it could use to make the Social Security payments. And I said, there you go. The whole problem is solved. And you would be amazed at how many people took me seriously. And oh, yeah, Peter Schiff has come around. Great idea. I mean, they can't even see the sarcasm because that's how ridiculous it is. Because Senator Loomer and, they're saying we're going to pay off the national debt with all this Bitcoin. How are we going to pay off the debt? The minute we try to sell the Bitcoin, it's going to collapse, right? It would only go up because we were buying it. And that's why so many people are buying Bitcoin now. It's interesting that Bitcoin and gold are going in the opposite direction, right? Bitcoin's been going straight up ever since Trump won, and gold's been going straight down. Again, I've said this. Bitcoin is the anti-gold. It's not digital gold because it does the opposite of whatever gold does, because it's nothing like gold. It's not a safe haven. It's not a store of value. It's a speculative asset, and people are buying it because they're speculating on the asset going up, even though the fundamentals, if it was digital gold, if it really behaved and acted like gold, it should be going down.
In today's news recap, silver dips under $30, recovers quickly. JP Morgan analysts suggest sell-off is short-term and the debasement trade rumbles on. Silver prices moved under $30 an ounce in trading Thursday morning. Still, prices recovered after the United States released its producer price index data, showing a rise in prices and suggesting slightly higher inflation in October. Precious metals have been trending downward following the U.S. election of Donald Trump to return to his previous post as president. Gold traded in the $2,570 range Thursday morning. Reduction in supply. On Wednesday, the Silver Institute Industry Association said it expects the global silver deficit to fall by 4% in 2024, with a 2% supply growth offsetting a demand boost of just 1%. The Silver Institute expects a 5% increase in supply due to a spike in Western silverware scrap. Strength of the dollar. The U.S. dollar has surged in foreign exchange markets after the election of Trump, who campaigned on a nationalistic economic strategy. The move surprised JP Morgan analysts, who released a note Wednesday stating, "The swift move lower in gold post-election ran counter to our strategists' expectations. However, they think the sell-off is a stumble, not a sea change." The note continued, there isn't a break in thesis that a Republican sweep of government will likely continue to fuel further upside for gold in 2025 as the debasement trade rumbles on. Now we'll show you more clips, but first smash the subscribe button and turn on notifications so you do not miss out our recaps. Enjoy the episode.
Like gold, but it's not, because it's based on just more buying. And the bubble getting bigger as now the taxpayers are being dragged into it, right, without any say in the matter, so that they could be left as the final bag holders. But what's driving the narrative, and you can read this in online, because there's a lot of explanations, like, why is this happening? Why are interest rates rising? Why is the dollar rising? Why is gold falling? Right, and the reason is they're saying that the markets believe that this strong economy that Trump inherited from Biden is just going to get even stronger with these tax cuts. And that as a result of this, extra GDP growth generated by the tax cuts, the Fed is not going to be able to cut rates as much as we thought. And therefore, we're going to get tighter monetary policy. And that tighter monetary policy is why interest rates are rising long term, because we're not going to get the cuts. And that's why the dollar is going up, because other countries that have weak economies, they're going to be cutting rates. But America, with a strong economy, we're going to be raising rates, so that divergence between yields in the U.S. and yields in Europe, for example, is going to widen, which is going to favor the dollar. And then the strong dollar and rising yields, well, this is bad for gold. Now you throw in the U.S. government dumping their gold to pay for Bitcoin, and maybe people are thinking, oh, maybe all the other central banks that have been buying gold will start selling their gold so they can buy Bitcoin. It's a bit, it's a race to see who can have the most Bitcoin. I mean, that would be basically like the Biggest Loser, right? Whoever wins, whoever buys the most Bitcoin is the world's biggest loser. But anyway, that entire scenario about why rates are rising is bunk. They're rising, but not for the reasons that people think. And that's why the impact that they're having on the dollar and the gold market is wrong, and why it's just creating a better buying opportunity for people who actually understand what is going on. And all right, so I'm going to debunk the idea that it's the strong economy that's what's driving all these markets. So first of all, Trump did not inherit a strong economy from Biden. If the economy was strong, Kamala Harris would have inherited it from him. The reason that Trump won is because the economy stinks. It's not strong, it's weak. The voters said as much when they, told people in the exit polls. And that's why I was so confident for so long that Trump would win, because I knew that the voters didn't want 4 more years of what they were experiencing, because they were not experiencing a strong economy. They're experiencing a weak economy where they're working 2 or 3 jobs and they still can't pay the bills. So they have record debt, right? So people were voting for change. So Trump is not starting with a strong economy. He's starting with a weak economy, and it's going to get weaker. It's not going to get stronger. It's going to get weaker. That's the trend. Now, we're going to get some tax cuts, but those tax cuts are not going to make the economy stronger. They're going to stimulate spending in most cases. But we're also going to have rising interest rates, which is going to weigh down the economy, because as long as the Fed is doing quantitative tightening and deficits are rising, interest rates are going to keep rising. I think we could rise up to 6% pretty easily on the 10-year. And that's going to put a lot of upward pressure on mortgage rates and all kinds of interest payments. That's going to be a drag on the economy. See, people who think we can have all this growth because the tax cuts are going to boost the economy are overlooking the impact of rising interest rates that are going to be exerting an opposite force on the same economy. So we're not going to get all this economic strength just because Americans spend more money. I mean, we spend plenty of borrowed money as it is. So I think the real reason that yields are rising is not because the economy is going to be stronger, but because the deficits are going to be bigger. That's the problem. Debt is going up. The Treasury is going to be selling more bonds. And so the price is going to go down. Plus, inflation is not going down. Look, we got the CPI numbers. And again, these are official numbers. CPI up 0.2% for October. But that's the same as the prior month. Didn't make any improvement. The year-over-year number was 2.6. The year-over-year number a month ago was 2.4. Now, the market's expected 2.6, but it's going in the wrong direction. What indication is there that 2.6 is going to go down to 2? There is none. In fact, it's more likely to go to 3 than it is 2. Food and energy, the core, which supposedly is more important, was up 0.3, the same as the prior month, no improvement. The same with the year-over-year core, up 3.3. That's supposedly what the Fed wants to get down to 2, and it's still above 3. And again, it's more likely to go to 4 than 2. In fact, we're closer to 4.
Could this really happen? Are central banks bold or reckless enough to make such a massive pivot in their reserves? Peter's skepticism about Bitcoin being digital gold certainly makes us think twice about how this could play out. What do you think? Are central banks heading down a dangerous road, or is there a chance they might embrace Bitcoin as a major reserve asset? And how would that impact gold's position in the financial world? Let us know your take in the comments below. If you found Peter's insights valuable, don't forget to like, subscribe, and hit the notification bell so you don't miss our next video. Your feedback helps us bring you the most relevant content. See you in the next one.